Welcome back to TalkTickers. Ready for another deep dive?
Always.
Awesome. Today we're breaking down Autodesk's Q4 2025 earnings call, and there's some seriously interesting things going on.
Like what?
Well, get this. Autodesk is going all in on the convergence of design and make in the cloud. It's all powered by platforms, industry clouds, and AI. We're talking a future where designing a building and actually building it are seamlessly connected. And AI is doing a ton of the heavy lifting.
Yeah, I saw that. Pretty wild stuff, Rick.
Wild is an understatement. But before we get too deep into the weeds, let's start with the basics. What were the big takeaways from the call?
Sure. So Autodesk actually crushed expectations for the quarter. Billings, revenue, both super strong.
And what about margins and free cash flow? Those are always key metrics.
Yeah, those beat expectations too.
Wow. So they're doing incredibly well financially.
Yeah, and looking ahead to fiscal year 2026, they're projecting some pretty impressive growth too. Billings are expected to increase by 17% to 19%.
Whoa. And revenue.
Revenue growth should be somewhere between 8% and 9%. Not too shabby, right?
Definitely not. So we're talking strong performance now and even stronger projections for the future. But didn't they also announce some kind of restructuring?
They did. They're optimizing their sales and marketing operations. It's all about shifting resources toward those strategic priorities we talked about earlier, cloud computing and AI.
Makes sense. Got to stay ahead of the curve, right?
Absolutely. And to do that, they're streamlining processes, beefing up their digital self-service options, and working to integrate their channel partners more tightly.
So it's a pretty significant overhaul.
Yeah, it is. But the goal is clear. They want to increase customer satisfaction and make their workforce even more productive.
And ultimately boost those operating margins, right?
Spot on. They're aiming to be a leader in gap margins within their industry.
Ambitious, but it seems like they're on the right track. Now let's talk about their construction business. That segment seems to be absolutely killing it.
Oh yeah, it's on fire. They added almost 400 new logos just in Q4.
Wow, 400. That's huge. What's driving that kind of growth?
Well, their solutions are proving to be really effective across a variety of industries. We're talking architecture, engineering, construction, you name it.
And what about AI? I know they've been talking a lot about that lately.
Yeah, they're investing heavily in AI, and it's already starting to pay dividends.
Yeah.
They highlighted the Auto Constraint Tool in Fusion 360, which is pretty cool. It uses AI to simplify sketch geometry.
So it's like an AI design assistant.
Pretty much, yeah. And the initial results have been really encouraging. Apparently, the acceptance rate is already around 50%.
50%? That's massive.
Yeah.
Okay, so they're exceeding expectations, restructuring, investing in AI, and their construction business is booming.
Exactly.
What else did they talk about on the earnings call?
Let's see. They also dove into their go-to-market optimization efforts. Basically, they're getting really serious about streamlining their sales and marketing operations.
Okay, so what does that actually look like? What are they doing?
Well, they're consolidating teams into these centers of excellence and investing in scalable systems and processes. They're also working to strengthen their relationships with their channel partners.
So a multifaceted approach, but with a clear objective.
Exactly. They want to boost customer satisfaction, make their workforce more productive, and ultimately drive those operating margins even higher.
Makes sense. But let's face it, they're operating in a pretty uncertain economic environment right now.
You're not kidding. But to their credit, they're acknowledging the challenges head on. They even admitted that the current climate is affecting customer sentiment and impacting new business growth.
So how are they planning to navigate these choppy waters?
Well, they're focusing on what they can control. They're doubling down on improving channel productivity, pushing for growth in those emerging businesses like the make category, and continuing to invest in the cloud, their platform, and of course, their AI capabilities.
So basically, they're staying the course and focusing on their strengths.
Precisely. They're emphasizing their resilience and their diversification as key advantages that should help them weather any economic storms.
Love that attitude. Okay, so we've covered the basics, but now let's dig into the specifics. What are some of the key growth drivers Autodesk highlighted?
Well, their make business segment, which includes both manufacturing and construction, is showing really strong growth, especially in those emerging markets.
Interesting. Anything else?
Yeah, their construction and fusion businesses are doing exceptionally well too. They're seeing a real increase in the attachment rates for fusion extensions.
So their cloud-based design and manufacturing solutions are really gaining traction.
Totally. And they're banking on these trends, along with their investments in the cloud, their platform, and AI to drive even more growth in the future.
Sounds like a solid strategy.
Right.
Okay, now it's time for the fun part, our This Is Not Financial Advice segment.
Yeah. Remember, folks, this is purely for entertainment purposes only. We're just brainstorming and having some fun with potential trading strategies.
Right. This is not a recommendation to buy or sell anything. Always do your own research and talk to a financial advisor before making any investment decisions.
Couldn't have said it better myself.
Okay, so with that disclaimer out of the way, here's my hot take. I think Autodesk is being a little sneaky. They're downplaying their long-term growth potential while simultaneously hinting at some huge margin expansion and increased shareholder returns.
You think they're setting us up for an upside surprise?
That's what I'm thinking. The market seems to be hung up on the fact that they dropped that 10% to 15% growth framework, but they're still projecting solid growth for fiscal year 2026.
True. And they're pouring resources into areas with massive long-term growth potential, like, the cloud platform and AI.
Exactly. So here's what I'm thinking.
Lay it on me.
We buy a long-dated call option on ADSK.
Okay, a bullish bet.
You got it? We're betting on a resurgence in growth, especially as their make businesses really start to gain traction, and hopefully the macro environment improves a little.
Makes sense, but what about the risks?
Of course there are risks. Macroeconomic conditions could get worse. New subscriber additions could stay sluggish. And let's be honest, their strategic initiatives might not pan out as planned.
You're not sugarcoating anything, which I appreciate. So it's a classic high-risk, high-reward scenario.
It is. That's what makes it so exciting.
The beauty of the market, right. There's always a chance for big rewards, but you got to be willing to stomach the risks.
Couldn't agree more. So there you have it, folks. That's our This Is Not Financial Advice segment for today. It's all about sparking a conversation, thinking critically, and having a little fun with the crazy world of investing.
Absolutely. Now, before we move on, I want to hear your thoughts.
Yeah. What do you think about our bold but totally hypothetical trade idea?
Do you think it has legs?
Or is it just a pipe dream?
Let us know in the comments. And as always
do your own research.
And consult with a qualified financial advisor before making any investment decisions. One thing that really jumped out at me was their increased focus on shareholder returns.
Oh, yeah. How so?
Well, they're bumping up their share buyback program by a significant amount, like 30% to 40%. That speaks volumes about their confidence in the future of the business.
Yeah, that's a pretty strong signal to investors. It's like they're saying, hey, we believe in what we're doing and we think our stock is undervalued.
And they're putting their money where their mouth is.
For sure. And let's not forget about their commitment to AI.
Right. They highlighted the success of that Auto Constraint Tool in Fusion 360, and it sounds like there are more AI-powered features in the pipeline.
It seems like AI is more than just a buzzword for them. It's becoming like a core part of their product strategy.
Absolutely.
And, it's interesting how they're not just focusing on design and manufacturing with AI. They're also exploring its potential in construction. Like, imagine if they could make BIM accessible to a wider range of companies using AI.
Yeah, that could be a game changer.
Right. It would democratize access to those powerful tools that were previously out of reach for smaller firms.
That's a huge growth opportunity for sure.
Speaking of growth opportunities, let's circle back to their go-to-market optimization efforts.
Yeah.
They're putting a lot of effort into streamlining their sales and marketing operations, which should hopefully lead to greater efficiency and customer satisfaction.
Yeah, it's all about working smarter, not harder.
I like that.
They're consolidating teams, investing in scalable systems and processes, and they're also strengthening relationships with their channel partners.
So lots of moving parts, but it seems like it's all aimed at achieving that same goal, higher operating margins.
Exactly. And they're projecting some pretty impressive numbers, like non-GAAP operating margins between 39% and 40% for fiscal year 2026.
Wow, that's pretty good considering the economic headwinds they're facing.
Right. It's a testament to their commitment to profitability. They believe they can achieve GAAP margins among the best in their industry once the optimization is complete.
Now, we can't ignore the elephant in the room, the economic uncertainty out there.
The big one, that's for sure.
We know it's impacting customer sentiment and it's slowing down new business growth. Autodesk acknowledged this in their call, but they didn't seem too worried about it.
What's key is their focus on what they can control.
Right.
They're doubling down on enhancing channel productivity, driving growth in emerging businesses, especially in that make category, and they're continuing to invest in their cloud platform and AI.
It's a proactive approach.
Yeah.
Rather than just waiting for the storm to pass, they're taking action and trying to position themselves for success.
Yeah, I like that mentality.
It aligns with their emphasis on resilience and diversification. They're essentially saying, hey, we're adaptable. We can weather any economic challenges that come our way.
Now, shifting gears to the growth drivers I highlighted, construction is clearly a star performer for them.
Yeah, that's no surprise. The industry is booming, and Autodesk is right in the thick of it.
It's growing rapidly, and they're attracting new customers at a healthy pace.
Yeah, and Fusion 360 is doing very well, too.
Totally. The increasing attachment rates for Fusion extensions show that customers are really embracing their cloud-based design and manufacturing solutions.
It's clear that their investment in the cloud and AI is paying off in those areas.
They're creating this connected ecosystem that empowers their customers to design, manufacture, and collaborate more efficiently.
All right, now it's time for everyone's favorite part of the show. It's time to let our imaginations run wild.
Buckle up.
It's time for our This Is Not Financial Advice segment.
However, folks, this is purely hypothetical and for entertainment purposes only.
Yeah, think of it as a mental playground where we can toss around unconventional ideas, challenge assumptions, and just explore the vast, sometimes crazy landscape of investment possibilities.
So no suing us if these trades go south, right?
Exactly. This is not a recommendation to buy or sell anything. Always do your own research, talk to a financial advisor, all that good stuff.
Okay, disclaimer out of the way. What's your bold prediction this time?
Okay, so I've been thinking, and I think Autodesk might be subtly hinting at a potential spin-off of their construction business.
Whoa, a spinoff. That's a pretty big move.
It is, but think about it. Their construction business is growing like crazy, it's attracting a lot of attention, and it could probably command a pretty premium valuation as a standalone entity.
Yeah, I see your point.
A spin-off would definitely unlock some value and allow that construction business to flourish independently. It could potentially attract a whole new wave of investors.
Makes sense.
And it would also allow Autodesk to really focus on their core design and manufacturing businesses.
So it's a win-win.
Exactly.
But how would we play this?
Well, we could start accumulating ADSK shares now.
Okay.
We're betting that the spin-off rumors will start to gain momentum and drive the stock price higher.
It's a contrarian play for sure. The market seems to be fixated on that decision to ditch the 10% to 15% growth framework.
Right.
But a spin-off announcement could completely change the narrative.
And potentially send the stock price soaring.
But, of course, there are risks. There's no guarantee that a spin-off will actually happen.
Sure.
And even if it does, the market might not react as favorably as we hope.
That's the nature of the beast, right?
But on the flip side, the potential upside is significant if the scenario plays out.
Exactly. So there you have it, folks. That's our This Is Not Financial Advice segment for today. Remember, this is purely hypothetical and for entertainment purposes only.
Absolutely.
It's all about sparking a conversation, encouraging critical thinking, and exploring the wild world of investing.
Now, we want to hear from you.
Yeah. Do you think this spin-off scenario has legs?
Or is it just a flight of fancy?
Let us know in the comments.
And as always,
Do your own research.
and consult with a financial professional before making any investment decisions. They've laid out a pretty bold vision for the future, and their investments in cloud technology, AI, and those industry-specific solutions seem to be paying off.
It definitely seems like they're firing on all cylinders, right? But they're not just focused on growth. They're also committed to strong governance and ESG principles.
That's right. They're actively working to reduce their environmental footprint, promote diversity and inclusion, and of course, uphold ethical business practices.
Which is awesome to see. Now, before we wrap up our deep dives into Autodesk's Q4 2025 earnings call, let's have a little fun with our This Is Not Financial Advice segment. Remember, this is purely for entertainment purposes only.
Yeah, think of it as a brainstorming session where we explore some, out there but potentially lucrative trade ideas.
Okay, so here's my bold prediction. I think Autodesk is secretly developing a revolutionary platform for creating and managing digital twins of entire cities. Like, imagine urban planners, architects, engineers, and even citizens, all collaborating in this virtual world to design and build the cities of the future.
Whoa, that's a fascinating concept. You could simulate the impact of new infrastructure projects, optimize traffic flow, and even model the environmental impact of urban development, all within a virtual replica of a city.
Exactly. It would totally revolutionize urban planning and design. You could make cities more efficient, sustainable, and livable. So here's the play. Buy long-dated call options on ADSK, betting that the unveiling of this, city-scale digital twin platform will send the stock price through the roof.
It's a high-risk, high-reward proposition for sure. I mean, building a platform of that scale and complexity is a massive undertaking. No guarantee of success, but if they pull it off, the potential upside is huge.
So what do you think? Does this city-scale digital twin idea have legs, or is it just a little too far-fetched?
It's definitely a bold vision, but, considering Autodesk's track record of innovation and their commitment to, pushing the boundaries of design and make, I wouldn't rule anything out.
Well, folks, that concludes our deep dive into Autodesk's Q4 2025 earnings call. We covered their impressive financial performance, their ambitious strategic initiatives, and of course, we explored some wild but plausible trade ideas in our This Is Not Financial Advice segment.
We hope you found this deep dive insightful and engaging. Remember, investing is a journey of continuous learning and discovery.
Stay curious, stay informed, and always do your own research before making any investment decisions.
Thanks for tuning in to TalkTickers.
For Shortcut to Earnings Call Insights, we'll catch you next time.